Hello, everybody, and welcome. Thank you for joining us today. On behalf of the team at Coindesk and for Secure, we're glad that you're here. My name is Debra Geister. I am the Vice President of Compliance Solutions for Secure. And joining me today, we have a couple of wonderful panel experts. Erik Kiefel, who is the AML manager of Zero Hash. And Erik certainly is no stranger to government policy as a former Senior Policy Advisor for Strategy and Innovation at FinCEN. And we also have Jeremy Sheridan, who is the Head of Regulatory Affairs at Prime Trust and a former Assistant Director of the U.S. Secret Service Office of Investigations. So welcome to both of you, and thank you so much for joining us. Now, certainly it's been a very active news cycle as of late with all the things going on in cryptocurrency, and a lot of conversations around FTX and what's happened with FTX. Our objective here today is to discuss maybe what we've learned and what we can take away from the FTX experience and what the regulatory outlook is. And as the title suggests, a look ahead at the top compliance trends in crypto that we see for 2023. So I think our panelists are very well positioned to be able to do that for us today. So I'm going to start with Erik. And Erik, if you'll give us a little bit of background and give us some color on your experiences. And then I'd like you to, if you can, walk through the background of the history of cryptocurrency and regulation, pretty much up to the AML Act of 2020, and kind of set the stage for us. Give us a little bit of that history lesson, if you would.
Sure. No, thank you, Debra. And I want to thank the teams at Coindesk and Secure for supporting and sponsoring this event. I'm just really pleased to be able to do this on behalf of Zero Hash. Just so everyone's aware, I am very recently in the private sector. It's been a long time since I've been in the private sector, multiple decades in the government, but I obviously wanted to make that choice to go to Zero Hash because it was time to be on the actual side of making things happen in the innovation space, and to do it with a startup and a startup like Zero Hash that actually has been around for a while, since 2017, and to do so helping out in the wheelhouse that I've been in for the last several years in the anti-money laundering, countering the financing of terrorism world has been a real great opportunity for me. And so as I walk through sort of that general history and way of thinking about the frameworks and the principles that have guided how governments, particularly the US, and I'll focus primarily on the US here, have approached the concept and challenges of e-money, e-cash way back in the day, to cryptocurrency, digital asset, virtual asset, as we now call it today. And that story, at least for me, goes way back to another time when there was a World Cup back in the 90s, this time in France, where I was working at MasterCard and supporting all of those efforts, as well as ongoing efforts to create electronic cash and stored value for both retail and P2P transactions. And back then, the way governments were looking at this, and it continues to be this way, was what kind of considerations around consumer protection, law enforcement, or other sort of national security issues, and broader supervisory considerations, often around safety and soundness, were all high among the key things that governments around the world were looking at as this concept of e-money or e-cash were being initially developed. And I want to share something that was written way back in '97 that I think is exactly right for today. This is from a report of the G10 on electronic money at the time. And they highlighted some key elements, and that is transparency, making sure that potential users know what the features, the costs, the risks are with the products that they're buying, and ensuring that there is useful disclosure of that. 2, financial integrity, ensuring that the issuer or players in this area are able to have adequate liquidity, capital, and internal controls, ensuring that they have risk management policies and procedures consistent with protecting the financial integrity, not only of what they're doing, but the broader financial system. Technical security, ensuring that things can be protected against fraud, counterfeiting, and these days ransomware, that could threaten the integrity not only of the services being provided, the products being provided, but the financial stability more broadly, potentially. And then the vulnerability to criminal activity. And this is something that I've been working a lot on in my most recent area in FinCEN. But it really is about understanding the vulnerabilities and the risks that any sort of new payment method, new way of transferring value or funds brings with it, just by the nature that it's new and people are exploring it, and the criminals explore it faster than often others do. And it's in that background that my personal transition, and also sort of the broader transition of this kind of topic, went to the Federal Reserve Board, where I spent a decade or so working on a very, very rapidly changing payment system. One where, when I started, electronic payments generally in retail had for the first time overtaken checks. People may recall what those are. They're paper instruments. And as part of that, and especially following the events of 9/11, we were very much involved in fundamentally changing the framework of the payment system to one that is more electronic generally, particularly on the retail space, with the Check 21 Act, with a significant restructuring of the check processing system around the country from 45 offices to one, and supporting broader innovation, including in the e-money area. And the Fed, while I was there, and as you've seen in the recent report on their potential consideration of a central bank digital currency back in January, has continued to focus in a couple of key areas. That same consumer issue area that I mentioned at the beginning, the same safety and soundness concern. But with the Fed, there's an extra layer to this, and that is the role of the Fed as the monetary authority, and the effect that even back in the 90s, everybody was thinking about how might this new form of electronic currency or money affect the money supply? How might it affect the Fed's ability to impact and either shrink or increase the liquidity in the overall financial system in the U.S. and also globally? So these continue to be the kinds of issues that at a central bank level, the regulators and the economists are thinking through. And then following 9/11, I turned my attention to the kind of illicit financial activity that could be deployed in a number of different ways, and was beginning to be looked at in the virtual currency space. And so I moved over to the Financial Crimes Enforcement Network, or FinCEN. They're the administrator for the Bank Secrecy Act, which is the U.S. regulations in this space. And while we were there, one of the key things that we did, and you'll see a theme of this, is that in the AML-CFT space, the vulnerability to illicit activity space, there's actually been a lot of action on the regulatory side, on the legal side, as well as the broader compliance and enforcement side. And that's occurred not only in the U.S., but more broadly internationally. And so while I was at FinCEN, one of the key first steps in getting to that point in the U.S. was to rephrase, update our rules as it related to money services businesses, and to make clear that something called a money transmitter, which most people think of, they think of Western Union or MoneyGram when we say money transmitter, but to make it very clear that these rules related to activity, doesn't matter who or what you are. It could be informal, it could be a hawala, it could be some sort of bartering system, or it could be something that is taking the place of funds, of money, and is occurring to move that funds or value between people, between places, by any means. And that was the fundamental change in what we did in the late 2000s, early 2010s, to promulgate new rules for money services businesses, and specifically updating the definition for money transmitter. Coming out of that, in 2013, FinCEN issued some guidance that clarified the application to convertible virtual currency, those obligations for money transmitters to be registered with FinCEN, to have an AML, now AML CFT program under the AML Act, to report suspicious activity, to have a number of other record keeping and other specific information sharing and other enhanced due diligence requirements. And so that was the key turning point in the US for the regulation of this industry, focusing on that illicit financial crime element. And throughout the decade that followed, there were a number of high-profile enforcement actions on the civil side as well as on the law enforcement side against both exchangers, administrators, and so forth in this space. And it is really about that effort to bring the regime under a clear path, a clear set of rules that have existed already for activity that is similar in nature, that was key to the U.S. side in the AML CFT space. That same thing occurred over time, especially in the last half of the last decade before COVID, with what was going on internationally. One of the things that we all recognized, and particularly when the U.S. had the leadership of what's called the Financial Action Task Force against money laundering and terrorist financing, we recognized the need to have international standards for virtual assets or virtual asset service providers, or VASPs, as they're called in the FATF parlance. And the reason that was necessary is if you had this hodgepodge of jurisdictional requirements all over the globe, where someplace might have no requirements whatsoever in terms of anti-money laundering and terrorist financing related to virtual currency and the actors involved, and another jurisdiction has very tough and clear rules like in the US, you would have that arbitrage, that regulatory or legal arbitrage occurring, and you'd be sending everybody to the places you don't want them to go. So it was very important on the international level for all the member jurisdictions of FATF to get together to agree on standards, which we did ultimately in 2019, and to begin to implement them. Those implementations have been slow, they've been steady. Some countries have decided to ban it outright. Other countries have decided to take on their own central bank digital currencies with mixed results. But the key thing here has been that at least on the illicit finance side, there was a clear recognition that there needed to be clear standards. They needed to be broad-based, fully adopted across jurisdictions, and there needed to be cooperation across the jurisdictions to address this. And that's where the role of the governments, the role of the financial intelligence units in each jurisdiction, of which FinCEN is the United States, it has been so key, is bringing that all together so that not only on the legal and regulatory or policy side, you have greater consistency globally, but at the operational level, the jurisdictions are able to work together at the FIU level, at the law enforcement level, to address where there is misuse. The other areas that I mentioned early on, the consumer area, the safety and soundness area, those continue to be areas where in the U.S. and abroad, they are still working through some fundamental issues. Obviously, here in the U.S., the Fed is reviewing, considering whether it makes sense to do a central bank digital currency. If you read the tea leaves from the various governors of the Fed, particularly the vice chair and a few others, that may not be fully in the cards, but that is still something that they are reviewing. And the other piece of this is within the U.S., having a broad-based coordinated effort. So for many of these years, it's been different agencies trying to take a different approach or trying to understand how to apply their existing rules to this particular activity, this type of value. And in the case of FinCEN, obviously we were able to do that in the AML CFT space, but because we have partners in the federal banking agencies, in the SEC, in the CFTC, in the IRS, in the states, that was a more coordinated effort. And we rely on the FinCEN relies on those agencies to get the work done, to do the examinations, to work on the compliance. It's been a little more complicated in some other areas, and that's why the executive order that came out earlier in the year from the Biden administration was so important, because it fundamentally said we are going to do this together. We are going to do this in a coordinated way. We are going to make sure that those consumer issues, those transparency issues, the safety and soundness issues are all addressed in a cohesive way. We continue to focus on the vulnerability issues, but it's about moving forward as an overall government and approaching it in a coordinated fashion. And some of the outcomes of that executive order, as everyone has seen, has been the recent reports from Treasury, the Department of Justice, and others outlining key recommendations for going forward in that vein of regulation. So the one thing I'll highlight there, and then I'll talk briefly about the AML Act, is that it is about how the regulation is going to be done and what exactly it'll say. It is definitely no longer a question of, will there be regulation? No, there will be regulation. It is just a question of how extensive, who's involved, and what that means for all the players here in the US and globally that will be affected by it. And you see the same thing happening in Europe with the European Parliament on the verge of voting on new requirements in the virtual currency space, even while they're taking a look at what has been happening recently to make sure that what they agreed to in the normal sort of parliamentary efforts is going to be sufficient. The final thing I'll note here is that one of the biggest changes in the illicit finance space over the last couple of decades since the Patriot Act was the Anti-Money Laundering Act of 2020. And that act in particular has a couple of areas that are extremely important for the virtual currency area. One, and it comes early in the act, is actually changing the definition of currency exchange and money transmitter to include things that substitute for value or funds, and bringing in that concept that we had in the regulations back in 2011, specifically into the statute, and similarly amending the registration requirement. What you see as well, for those of you who know DC, there's a little bit of a list that the Office of Management and Budget issues. They're part of the White House, actually, about upcoming regulations. It's called the Unified Agenda. And when you go and look at that, you can see a number of the things that FinCEN and others are going to be doing in the virtual currency space. Because I just recently left, I can't speak a lot about things that we had proposed over the last couple of years that are still, quote unquote, in public rulemaking process. But I think that gives you a sense that those remain live to at least some extent. And there are a number of other areas that will be occurring. Deborah, with that, I'd like to turn it back to you.
Yeah, thank you, Eric. Thank you for kind of level setting and give us that little historical overview. I think that's helpful. And I want to get back to a couple of things you said, but before we do that, a couple of things. I want to make sure that the audience is aware. If they want to ask questions, please do so in your chat. We have allowed time at the end of the session to be able to try and answer your questions. So please don't be shy about asking. I want to turn now to Jeremy. And Jeremy, I'd like you to give us a little bit more background on your current role, some of your experiences. And based on that experience, How do you view the role of government in being able to regulate the cryptocurrency space?
Yeah, thank you, Deborah. Pleasure to be with you. And Eric, thanks for the time, as well as thanks to Coindesk and Secure. So my background is in enforcement. I spent 25 years with the U.S. Secret Service. I spent time towards the latter half of my career as the assistant director for our Office of Intergovernmental and Legislative Affairs, handling all things related to legislation, government affairs for our agency. And final role was in the Office of Investigations as the assistant director. I know the Secret Service is better known for the dark glasses, earpieces, and stern looks, but in our lifeblood, we are actually founded for an investigative mission. Our role is to protect the nation's financial infrastructure and protect payment systems. So as a result of that role, I led the global mission of 162 offices and 3,000 personnel to conduct complex cyber-enabled fraud investigations that, of course, based on how digital assets are used to facilitate those, was very heavily involved in virtual asset investigative methods. My current role with Prime Trust is I am the Vice President of Regulatory Affairs, so I handle all proactive and reactive engagement with legislators, regulators, and law enforcement and others in order to not only educate, inform, advocate for the industry, for our company, but also ensure our company has the information it needs to maintain its regulatory first and compliance first standing in the industry. So to answer your question related to the role of government, and I think Eric hit on a great deal of salient points, but I do want to be maybe a little bit broader in my answer, and not to be cliche, but the role of government is, as it relates to this industry, digital assets, it is no different from really the core of what government is intended to do for society. And that probably sounds a little Boy Scoutish, but it's in order to protect people. The foundation and the role of government in the digital asset space is consumer protection, as Eric hit on in a couple of different capacities. The government must provide mechanisms to prevent fraud, abuse, scams, malfeasance, illicit activity, and everything in between. And I also think it's important to note as we go through this conversation, the inherent somewhat contradiction this question brings up is as I think it speaks to the ends of the spectrum we often see presented. And what I mean by that is that there are those in the industry who feel that any government involvement in this protection and consumer protection role is anathema to blockchain technology, as it assumes and interjects a central intermediary as opposed to the decentralized and distributed platform that really blockchain is based on. Now, certainly you can see merit to that argument, as it has been centralized entities that we have really been the most problematic, have been the largest failures and caused the most damage to consumers. And then at the other end of the spectrum, and you could see this play out in this morning's testimony with the CFTC chair in front of Congress, there are those that argue for heavy government involvement, control, in some cases outright bans. I testified in front of Senate Judiciary about a year ago. Senator Graham hit me hard on this about, can't we just outlaw crypto? It was within the ransomware construct, but the core of this perspective, I can see how people get there. There has to be a regulatory framework in place to ensure the consumer protection we're talking about, to enforce laws and regulations, but also very important that it facilitates the growth and innovation of the industry, and that we consider that these aren't mutually exclusive ideas about regulation, about government involvement, and about being a complete contradiction to the industry. So to be specific and answer your question about the role of government, it's got to be the balance. It's got to find the balance between the two ends of the spectrum, where we let the market participants decide how those different frameworks are presented to them and the risk calculus associated with entering into that market. And I really think that this is going to lend itself towards a third party qualified custodian type regime, where you have sound custodial services secured by a defined regulatory framework, exchanges not acting as their own qualified custodians that we've seen recently, bankruptcy law that identifies consumers' digital assets and consumers' properties are not subject to bankruptcy pooling, and really an overall structure that relies on the backbone and under the umbrella of the strength of the traditional financial system, but leverages the advantages of this technology.
I think that's such an important point, Jeremy, in that, how do you achieve that balance between not stifling innovation and all the great things that happen in cryptocurrency while still putting the controls framework in place. What are some of the things in your experience that have been, and I'll pose this to you as a follow-up to Erik, what are some of the things that you've seen that have worked well that you think would be applicable here?
Yeah, the use cases, this is the question we get hit most often, at least in my conversations with legislators and regulators. What are the use cases and where the industry is providing value? How is it bringing a better environment for consumers under this umbrella of protection? And of course, you can point to the speed, efficiency, transparency, privacy, which aren't contradictory concepts, cost savings due to elimination of intermediary fees. But how we're able to have liquid tokenized bonds representing real world credit, intermediation of saving and lending with crypto banks that I think will again be part of the advent of this whole process, operating as they mature. And I think it's also really important, as Erik has hit on, to look at the international considerations here. We tend to be obviously geo-focused and geocentric, in the West and certainly in the United States. But this industry is not challenging the US dollar or the euro right now, but countries with high inflation, weak payment systems, bad payment systems, authoritarian regimes, weak property rights. Bitcoin in itself is bigger than the broad monetary supply of a lot of developing countries. It's accepted at more points around the world than those currencies. And that will continue to grow as the technical friction reduces, and you'll get greater adoption internationally, which will of course translate here and create greater opportunities. I think the equality piece needs to be addressed. The use cases of this, again, are not communicated enough. You look at the COVID CARES Act, the Paycheck Protection Program, African-American owned businesses were 12.1 percentage points higher, more likely to obtain their loan from a fintech lender than a traditional bank. Automated loans are more than double small banks' propensity to lend to African-American owned businesses. And that shows the lack of a central or intermediary that we can really leverage through blockchain or decentralized networks. In law enforcement, my background, Europol says that crypto is key to cracking down on cybercrime. I've experienced and led teams that used the evidentiary value that's been a source of probable cause beyond compare, using blockchain and other investigative means. And it's beyond finance, right? I mean, healthcare will have privacy and security of personal data and medical information leveraged on blockchain technology, even NFTs where owner self-custody, intellectual property rights, all of these use cases that will be presented and really start to show the strength of the industry. And we need to get away from the false narrative, the misinformation that was presented even in testimony this morning, that it's solely used for illicit purposes and solely a tool for criminal activity.
Anything to add from your perspective?
Yeah, just a couple of quick points. I mean, one, in my most recent role at FinCEN, I mean, my job was to help spur that kind of what we call responsible innovation within the AML CFT space. And part of the way that's approached is not only with the players themselves, but with the vendors that they work with, the kinds of solutions that are being developed so that they can take advantage of exactly what Jeremy was saying in terms of the evidentiary, the transparency that's provided by the blockchain, the immutability, the ability to review what's going on throughout it, and really demonstrate the utility of that from a transparency perspective, as well as a value perspective. And a couple of quick examples. I mean, the blockchain itself, I totally agree, has so many potential uses for being able to, whether it's the smart contracts or being able to share information that otherwise would be siloed in a number of different databases and systems. It really does provide a catalyst for that growth in underserved groups. And for transparency, even in the government sector. One of the big things one of our partners, when I was at FinCEN, was doing in the Bureau of Fiscal Services was to use the blockchain, Ethereum based, to basically pay out contracts, on grants. And that way you could see ultimately where the value ultimately went to, so that you could fully be transparent, fully be auditable, that the money that was granted went all to the appropriate subcontractors and so forth. So it's also a way of leveraging good government and supporting that. So I completely agree on the points that there's a number of use cases, many of which haven't gotten the voice that they need to be stressed during all this time.
Yeah, that's a great point. And I think that there's a lot of narrative around what's happening and maybe some of the negatives, but there's so much positive that is being pushed even into the financial services industry, which is my background, right? More in the BSA side of the world. There's a lot of opportunity for us to leverage, right, some of that technology, and you're seeing more banks get involved with cryptocurrencies and some of those technologies and fintechs that are out there. So I think that's a very positive thing. But I think for those that aren't as deeply involved in the industry, there does outwardly from the news media anyway seem to be a lack of controls, right? And we saw that with the FTX case. And I think, to both your points, we saw Secretary Yellen last night on an interview talking about how there definitely would be regulatory oversight, and there's more to come on that. I think one of the challenges that we're seeing is because of this multi-jurisdictional issue that you both touched on, that it presented some challenges because there's not that coordinated effort yet, right? There's not all of these pieces of the puzzle in place. So how do we put some of those guardrails in place to be able to manage that risk? And if I'm looking at this as let's say a compliance officer in any industry, and I want to get involved with crypto, what are the things that I should be looking for to be able to mitigate that risk and put those guardrails in place?
Yeah, I'm happy to jump on that. And I'll start a little bit, Deborah, and I promise not to be too soapboxy about this. I call it the false narrative, the misinformation. Data tells the story, and coming from traditional finance, there's statistics that are called into question, but let's say we'll use Chainalysis 0.15% used for illicit use, right? Let's say they're off by a factor of 10. So it's 1.5% used for illicit use of crypto assets. Traditional finance is 3 to 5%, as you know. The 2021 estimates of $8 billion used for money laundering for the whole year of 2021 for crypto and virtual assets. In traditional finance, it's 2 to 5 billion a day. So it's very challenging to continue to, we don't argue I-95 should be outlawed because there are drug smugglers running from, south to north on it. I investigated credit card fraud for years. No one ever challenged the legitimacy of the credit card industry. The way this has happened in our industry, to me, is very challenging. But absent of that, I'll answer your question directly, and not take the narrative personally. The guardrails that we see, and I think Erik touched on this a little bit, is leveraging the technology in order to accomplish the safety, security, and consumer protection that people seek. Using the smart contracts, using zero knowledge proofs, using RegTech, SupTech, embedded supervision. You're starting to see this with proof of reserves that is, taking more of a prominent role in conversation following FTX. But it goes into organizational culture as well. At Prime Trust, and I'm sure at Zero Hash, there's a regulatory first, a compliance first culture that is embedded into our organization. And utilizing not only the technology, but the personnel, the culture, and to remember that the industry is cognizant of the ways we can reduce the burden on crypto and other DeFi companies to utilize third-party custodians. And I think this is really where it's going to move the industry away from centralized exchanges, or, as you saw with FTX, that opaque accounting, governance, and management, using qualified custodians regulated at a state and federal level like Prime Trust is, and have strict controls similar to that of banks, but still leveraging those elements of the technology that we've been talking about, not commingling the funds with operational budget, and having continual, regular, lawfully required audits by external parties and regulators that comply with the CFD, AML, BSA, KYC, and the full spectrum of banking requirements that are seen in traditional financial markets.
Great
Yeah,
answer.
and I totally agree with that, and I just add that from a zero hash perspective, I mean that's one of the things that we highlighted publicly when the FTX issue first came to light, is exactly how we've structured ourselves so that we are able to have that one-to-one fiat to crypto arrangement, that we have that separation between trading and liquidity. I mean, these are lessons we learned years ago, whether it was with Enron, whether it was during the Great Recession with the mortgage-backed securities. You don't combine things in a way that creates perverse incentives for revenue action at the expense of compliance and consumer protection. And that's one of the things that the industry, it's still nascent. I mean, it's still relatively compared to all the other ways in which we make payments, even debit and credit cards or ACH, they go back to the 60s and the 70s. This is still such a nascent area that there's going to be a lot of learning curves. We've had a few of them in this industry. And as the industry grows up, and becomes more mature and understands that the regulation and the appropriate following of that regulation actually has a positive revenue impact. And we've seen that over and over again, including in the AML CFT space, that there is a positive revenue implication for being a well-structured, well-managed risk-taking enterprise that balances the revenue side with the need to be cognizant of the compliance obligations. That's one of the ways in which we'll be able to do it, and be able to do it as an industry together, establishing standards, so, sort of building the bar to where we all should be, consistent with the regulatory framework.
Yeah, that's great. I think I see the FTX issue as and at the risk of dating myself, as the Riggs Bank, right? That we saw when the AML infrastructure came into play a little bit more purposefully within our financial services. And I think there's a lot that we're going to learn from this as we go forward and start peeling back the layers. But I think one of the questions from excuse me, from the audience is, how did such large organizations?
So I think we may have lost Debra for just a moment, but you were asking about the large organizations.
Yeah, I'm sorry. So how did such a large organization as FTX miss being scrutinized by regulators is the question. Should there have been more that could have been caught under that safety and soundness, which we've seen in banking, and some of the transparency issues? Should there not have been more done earlier is the question.
Yeah, Debra, and for that question, you know, I think one thing that we're challenged by is, if you look at the testimony this morning, is people really asserting that proposed legislation, the DCCPA in particular, would have caught what was going on at FTX. I mean, FTX was a foreign entity, that those laws would not have applied to, you know, what was going on. The FTX US issue was subject to regulatory regimes and frameworks. And I think the clarion call we hear most often is regulatory clarity. That's certainly important, and certainly important in primarily as it relates to the securities versus commodities and how we test definition. But what we are challenged most by is regulatory inefficiency, and we cry more for regulatory efficiency than regulatory clarity. And what I mean by that is, as a licensed trust company on the state level, you know, if you count DC, Puerto Rico, others, we have 53 state regulatory regimes we have to comply with. We have federal entities, everything, you know, the full spectrum, CFTC, SEC, CFPB, IRS, so on and so forth. And then you add the international requirements on top of that. So there is no shortage of regulatory frameworks or regulatory requirements that companies who are doing this the right way, like Prime Trust, like Zero Hash, who follow a compliance and regulatory regime under state, federal, and international law, make this industry, make this market a very safe and a very legitimate asset class and opportunity. The challenge is when you see the FTX is really consciously looking to circumvent that through international presence or operations, that's when the gaps in enforcement occur.
And the other thing I'll add there is that, and this is me more speaking relatively recently being a regulator, there are limitations on the government side in terms of personnel, in terms of resources, in terms of knowledge, that are hindrances. So if you take the BSA area, who is the examiner at the federal level for an FTX or any other virtual currency exchange? It's the IRS. And what do we know about the IRS? Well, we know they don't have enough agents. They don't have enough examiners. They don't have enough resources to be able to review and examine all of the registered MSBs, much less be able to identify all of the ones that are unregistered. And so there's also that element, being able to have the knowledge and resources at the governmental level, whether it's federal or state, so that you can have the appropriate oversight, the appropriate examination, the identification of where the risks are for a particular set of entities or areas, so that they can focus on that. And so that's another key piece of this, is it's not just about the rules themselves, but it's who actually implements them, who enforces them, and how well they're able to do that given the kinds of resources they have. And that's why the partnership between industry and the government, to help make sure that we understand what the expectations are and we're able to implement them in an effective manner, and is so important. And that cooperation, that partnership element, is one of the key things that'll be needed going forward, to make sure that we don't have these kinds of examples in the future.
I think that's a great point. Anytime you get an alliance between between the regulatory framework, private industry, even academia, right? You get a much stronger system that you start to build if everybody's collaborating. I think that's a really important point, Erik. I'm going to turn to a couple more questions that have come in. And again, if you have questions, continue to feed those in, and we will ask those of the panelists. I think one of the questions is, you alluded to some really positive things that have come out of the use of blockchain and cryptocurrency. Jeremy, why are those not being talked about more? Why are those still relatively unknown?
Unfortunately, it's the old cliche of nobody picks up the phone when the trains run on time, right?
Yeah.
It's, you look at SBF, it's international. It's SBF himself had taken on this somewhat larger than life representation of the industry that was novel, and he had this altruistic tilt to his communications. It became a personality that, unfortunately, psychology, human interest likes to see people at the top fail. And it's also understood. I think if I could be more tangible about it, it's misunderstood. People don't understand the technology well enough. People in the industry do. People who are customers and largely those who are innovators and working in the industry understand it. Unfortunately, and I don't say it's not a lack of capacity to understand, but unfortunately, regulators, law enforcement, and Congress has been slow to catch up, as Erik said at the start. The criminal element, they're early adopters of technology. They have unlimited budgets. They're well organized, and they can hammer on it all day long. They have established a better run machine, at least initially, and the rest of the law and government is catching up. So playing catch up is not a good way to get in front of the story, and unfortunately, the criminals have gotten in front of the story and controlled the narrative. I think that's changing. We listed all the positive use cases, and it will continue to change as adoption grows and people can see the value of what the technology and opportunities can be created with it. But unfortunately, that has dominated the conversation for now.
Yeah, and I think you get this negative positive news cycle, right? That tends to occur, and we tend to focus on the negative. I think as an industry, maybe we have to do more to be able to highlight, what are those positive outcomes.
And I think it's too binary too. I mean, it's either we have to outlaw it, or we're going to get everybody to be, driving Lamborghinis in a month if they invest in it. It's become too extreme. And like I said, the spectrum needs to be embraced about how it can be used reasonably, soundly, for the betterment, for growth, for opportunity, and those types of concepts. And it doesn't have to be this mutually exclusive idea. Yes, criminals are going to use it. There's nothing in life, unfortunately, that is not perverted by criminal activity. Look at the internet, right? Look at youth sports, right? I mean, it's everywhere. It's unfortunate. There are bad people who will use opportunity for bad things. That doesn't mean that thing in and of itself is a bad, piece of society.
Yeah, no, I completely agree. Next question, I'm going to turn to you, Erik, as somebody that's coming from the regulatory framework and maybe the policy side. Is it possible for the U.S. or international regulatory bodies really to keep up with the speed of blockchain, Web3, DeFi? Is that, I know it's a challenge we always had, right, within financial services. Is that even possible?
It is to a point. Is it going to be possible for the agencies that are involved in the supervision and regulation or the law enforcement aspects to be on the cutting edge of the technology? Not without other partners in the government that are on the cutting edge. And I'm thinking of the NIST of the world when it comes to the US. Or the National Science Foundation, or the various labs around the country, and the FFRDCs, the federally funded research and development centers, who can do this kind of cutting edge research and assist the regulators or law enforcement in understanding the technologies and how that translates to the application of the underlying laws and regulations. In those kinds of contexts, and the same thing with the relationship with academia, and the private sector generally, but academia in particular. That is where the cutting edge research is happening in many countries, not just the U.S. And being able to have that kind of interaction with academia consistently on these issues, partner with them. A number of things are good examples of this, such as Project Hamilton, that brought together the Federal Reserve Board in Boston with MIT, looking at central bank digital currency. I mean, these kinds of partnerships are one of the ways to help keep the underlying agencies and the regulatory considerations front and center as you're discussing, as you're building out, as you're learning and expanding the technological capabilities. And it also helps a lot to have these people explain these things to us, and do so in a way that there's a common language. That's always the hardest part, is having the way of translating what a technologist might be talking about to the language of a lawyer, and finding the middle ground of a policymaker who has to straddle all of this at the same time. And that's the additional thing that on the criminal side, they don't have that challenge. They all speak the same language when it comes to crime.
Very good. Thank you so much. I think we have time for one more question. And so This one has come in. Isn't the challenge with FTX a matter of missing financial controls that best support the separation of both roles and responsibilities, but also the intended use of funds? I think that's a key thing that we didn't talk about. But BSA and AML rules currently are mostly customer onboarding that support the entity allowed to move money. So is there something that we could do more in roles and responsibilities, those separation of controls, to be able to address these types of things?
Yeah, I think in practice, the companies like Prime Trust that are regulatory first and compliance first are adhering to those principles 24/7. You look at the compliance professionals' priorities and regulatory professionals' priorities and how those are executed in companies that are doing it the right way as it relates to data security, data availability, transparency, segregation of funds that we've talked about multiple times, collaborating with industry leaders and consortium partners, but also, like I mentioned earlier, the regulation first mindset, company-wide requirements, certifications, trainings, and sound security practice, both internally for network security. Our company is ISO 27000 certified. We're SOC 2 Type 2, and we're CSA Level 1. Once you have that as your bedrock and your foundation, all of those other requirements, industry best practices follow along, and it becomes really a part of your DNA. And really, there's no other way to do it. And I think that translates, if to Erik's point, with the public-private partnerships can translate into sound policy, sound legislation, sound regulation. If used as a model, instead of always looking at what has failed, look at what is succeeding, because there are a host of examples out there. I think, following the president's executive order, you look at the reports that came out from almost every government agency. It was to constrain, constrict, and limit the industry. The one exception was Department of Commerce that really leaned into enabling, growing, and facilitating the industry. And I think that opportunity is there.
Absolutely. And I think a couple of things that you touched on, and then I just want to wrap up on this. There are so many questions out there, but I think to your point, one of the things that Sam Bankman-Fried said, that he was not aware, right? And he didn't think that they had oversight and controls. And I think from someone who used to be a BSA officer, that in my opinion is a failure of the organization, right? It was always my duty to make sure that the board was well prepared, that the leadership was well prepared and understood the risk. And so I think as an organization, as an industry, we have to make sure that that dialogue, that education continues. And I think having sessions like this is really valuable. In being able to have further conversations and continue to be able to understand how we can do better in everything. So with that, I want to wrap this up and thank both of you so much for your time, for your insights, great questions from the audience. And this has been a great dialogue. So thank you both. On behalf of Coindesk and Secure, and also Prime Trust and Zero Hash, we certainly thank you for participating. Keep the questions coming. We will try and put together a document to be able to get those that we didn't get to answered. And thank you so much, and have a great rest of your day.
Thank you both.
Thank you very much. Bye-bye.